Half of office occupiers in Asia Pacific plan to add space even as cost pressures and shifting demand continue to weigh on the market. To unpack this, we have Thomas Chak from Colliers Hong Kong and Desmond Sim from Reliant. So jumping straight to our topic, what's driving this expansion despite mixed market sentiment? Thomas, would you like to answer first?
Well, yeah, apart from the rate cuts, which is going to, be expected, to drop down further in the second half of 2025, we are also seeing a big jump in IPO activities. As for the numbers, just for the first half of 2025, uh, we have the fundraising via IPO of $107 billion. So that is a big jump, a 700% jump from the same time last year. So, I mean, with that, it's creating a lot more demand for professionals, accountants, lawyers, bankers, etc. And some of these financial institutions we've seen in recent months are expanding their footprints in Hong Kong.
Well, in the case of Singapore, I think it's all about the stability of Singapore as a market. I think going forward, it looks more imminent that Singapore looks more like a gateway for Southeast Asia, which is a sector that is growing tremendously. In a tight market like for Singapore, in the office, I think there's a lot of flight to quality where the vacancy levels remains tight. So new buildings basically are often sought out, or even where what we call shadow spaces are also often taken up. I think that the main industry players are still banking and finance, pharmaceuticals, and of course, legal and professional services.
And what types of investors are currently most active in the market? Are we seeing more institutional players, family offices, or high net worth individuals?
Well, yes, definitely. The government have been rolling out a few initiatives to attract family offices and capital coming into Hong Kong. In 2025 so far, we have seen a pickup in buying and selling activities, mostly with end users, with some of the notable transactions like the Hong Kong Stock Exchange buying office spaces, the Airport Authority buying hotels for conversion for their staff and students. We are also seeing a pickup in activities from high net worth, cash-rich family offices coming to Hong Kong to buy discounted properties from Asia, from Singapore, Malaysia, Indonesia, and some from locals and China as well.
I think in a nutshell, Singapore being very investable all these years, yields have compressed. So I think yield chasers tend to be on the sidelines. So we do not see as many institutional players looking for assets at the moment because of the negative yield spreads or minimal yield spreads. I think, but however, going forward, when we see the interest rate seems to be tapering off, we are seeing more people on the sidelines waiting to come in, but in a controlled manner. So in a nutshell, over the past 12 to 24 months, we are seeing a lot of investments from family offices and high net worth individuals looking at capital, not appreciation mainly, but I think capital preservation as the main concept.
So with rate cuts happening across Asia Pacific, how are investors currently recalibrating their return expectations?
Well, as we know, the HIBOR have dropped significantly since its height around 5.5% about 2 years ago to now it's under 1%. So the cost of doing business and financing have dropped significantly. Now, the banks are still being cautious, especially on non-recourse loans, but we are seeing more institutions coming back to Hong Kong to look for opportunities and coupled with the government initiatives, we are expected to see activities starting to pick up in Hong Kong from the second half of 2025.
I think with rate cuts happening, I think, as I mentioned, the negative yield spread seems to be narrowing and maybe some would be breaking even. So with that would change what we call investors to look back into Singapore to look for quality assets, and at the same time we have also observed that not only being yield focused, they are also being total returns focused. That means them instead of just looking at just pure entry yield or the property yield, they are also looking at internal rate of return.
Thank you so much for joining us today, Thomas and Desmond.
Thank you.
Thank you.
Once again, those were Thomas Chack, Head of Capital Markets and Investment Services at Colliers Hong Kong, and Desmond Sim, Chief Executive Officer of REA. For more news, visit realestateasia.com.